Okay.
Right.
Mhm. Boy, that minute seems like it takes forever. Hello, I think we're live now.
I think
You
we are.
are. You are.
Awesome. Awesome. Thanks so much. Welcome, everybody, to Tactical Tuesday. Colin and I are honored to be here today. And we've got some good development insight to chat with you about today. But before we get into that, I just want to do a little housekeeping. So, Colin and I don't know if you know, but we are Ignited facilitators. And Ignited is sort of the paid group through Investor Life. But they are hosting an Ignited open house on March 26th, which is next week at 7 p.m. Eastern. And so if you're not already a member, if you're curious about what goes on inside the Ignited group, this is an opportunity that anyone from the Fearless community can pop in for an evening and hear about it. I've personally been an Ignited member for 5+ years. And it's one of the communities that I plan to be a part of forever. But yeah, if if you're looking for community, if you're looking for troubleshooting, if you're looking for education, anything, it's just an amazing group to be a part of. So I would encourage everyone to jump on next week and hear what it's all about. If you are curious and want more information, just type in open house below, and one of our lovely admins will get back to you with more information around that. So without further ado, I'll see if I can share my screen here and we'll get going on the development. Okay.
You'll just need to.
Oh gosh, am I sharing all my screens? Just put it to the Canva tab.
You're currently sharing your whole desktop.
There we go. There, that should do it. Now you should see our presentation, and we'll just go.
We were
There we
practicing.
go. Yeah, perfect. Can you guys see our screen now with the multifamily development?
Is it full screen? Perfect. Thumbs up, thumbs up. All right.
Okay.
Well, let's get going. So this might look familiar to you because we actually had the opportunity to present it at the last boot camp. So if you feel like you've seen this before, you have. And yeah, this is just an overview, high level presentation, I guess, based on what is involved in multifamily development. And because our experience is in Calgary and Edmonton, most of this will be speaking from an Alberta perspective. So keep that in mind if you are from other provinces. A little bit about us as investors. We are both realtors in Calgary, investor focused. We're longtime investors ourselves. I've been investing since about 2006. Colin,
2008.
2008. So we've got some time in this game. And we are most recently into the multifamily development space. Colin's been a part of 2 in Edmonton. I've got one that's almost at completion in Calgary. Lux, I think many of you have been following that journey. And Colin's got another one in Calgary that looks like it might actually get sold before breaking ground. So lots of experience in this space, and we're excited to share with you today.
Click on the presentation. There. Perfect.
So like I said, we're doing this in Alberta. And so why multifamily? Why Alberta? Why now? Multifamily in general, you're talking about more doors. So you've obviously got the economy of scale. And we like that. I guess when you get started as investors, typically you're looking at single family, you might put in a suite. But as you learn the game, you also learn economy of scale is a good thing. The more doors you have, probably the more dollars you'll make, and it mitigates risk, the bigger that you go. Right now, we are, and this presentation will be speaking mostly to the 8 to 12 unit size development, but there are slightly smaller and there are a lot bigger as well. Another reason that we like Alberta is the population growth. There's been, with the in-migration, it's been steady, and it's projected to continue that way. So more people means more renters, and we're looking at that for Alberta as one of the strong characteristics. Alberta also went through, and I think a lot of the country was seeing it, housing shortage, which of course equates to high rental demand. So that definitely played into our decision to start developing here. Alberta typically has lower barriers to entry versus other province. And so that was very desirable for us, as well as being quite landlord friendly. So if you're looking at doing it in other provinces, just, go through the checklist of why it is that you want to be where you're looking at, and maybe some other places too that the numbers might look better. Obviously, you sort of need to know a little bit about yourself. Like any other investment, any other, real estate project to get into, there's multiple ways of being involved. You can either be an active investor or a passive investor. I'd say both can be, very lucrative, but it's just a matter of knowing yourself and knowing which side of that you want to be on, because it does take both most often. I think this probably goes without saying for most of you, but there are many different types of multifamily. If you have more than one door, you are a multifamily owner. So you can, be as small as a duplex or a fourplex. And I will just say in Alberta, residential is 4 units and under, commercial is 5 units plus. So that will change how you're financing your project and how everybody looks at it. However, if you are a duplex or a fourplex, by all intents and purposes, you're multifamily. And then you sort of moved into the stacked townhome, which would be, 2 or 3 levels above ground in a townhome style with basement suites underground. Then we get into small apartment buildings, 5 to 24, I'd say, is a relatively small apartment building. And then your medium apartment is 24 to 75. We're not going to speak to anything larger than that, because you get into a whole new world, I think, beyond that size of construction. So like I said, we're doing mostly the 8 to 12, and that's where our experience lies. The development process is quite involved. And that's one thing I urge you to take into consideration from the beginning. It's not just a buy and hold at all. There are many, many stages, and we'll delve into each of these stages, but everything from land acquisition to project completion. And it is very involved and complex. Definitely, not for the faint of heart, but there are ways to mitigate risks and make sure that you're surrounded by the experts that you need. So I will turn it over to Colin. He's going to kind of go through each of the stages here, and I'll jump in with some actual experiences from the developments that we've done. Here you go.
Sounds good. So obviously the first thing you have to do is you have to find something that's of interest. And we call that the acquisition or land acquisition. And depending on what you're looking to build, it could be as simple as a single family lot, or it could be as complex as a land assembly that requires a number of different lots to come together. It will really be dependent on what you choose you want to start with and the location and market that you're planning on investing in. So for us, typically the type of land acquisition that we're looking for is corner lots in good communities inner city, either in Calgary or Edmonton, close to transit, good shopping, lots of schools, lots of choices. We find that those communities typically bring a good tenant base to start for this type of build. We're looking to use about 6,000 square feet for a lot in Calgary and about 7,500 square feet for a lot in Edmonton. Some of the things that you need to take into consideration when you're first evaluating whether or not a lot makes sense for this type of project would be, what are the site specific challenges and what are the characteristics of the lot you're looking at? Is the lot flat? Does it have, a front to back grade? Does it have retaining walls or does it need retaining walls? Are there trees on the lot? Are they monstrous trees or are they just simple little shrubs or bushes? Power poles, utility boxes, those types of things. Because at the end of the day, if you've got an alley that you're planning on building a parking space, whether that be just a parking pad or a garage and a suite above the garage, you have to understand what's involved with the site. Generally speaking, if you can have a clean lot that has none of those things, that's better than something that's got 5 great big pine trees and 2 power poles that you're going to have to need to deal with. Some of the other things that sometimes you run into is changes that the city would like to see the developer put forward, such as larger sidewalks. If you've got a driveway, maybe they want you to get rid of that driveway and put a curbed sidewalk in at a wider build than what's currently there. There might be a crosswalk or signaling changes in traffic signals. Depending on the size of the build that you're getting into, you might need, traffic studies. There's a lot that goes into kind of the planning early phases to understand what your acquisition is going to look like. Zoning is the next thing that you need to familiarize yourself with, and it's really important that if you're going to take on the requirements for what you're going to be building, then you really do need to understand what the zoning needs to be for what you're building versus what the current zoning is. You might know of the blanket rezoning that's happened in Calgary and Edmonton. It's happened in other communities as well, but specifically those communities we're familiar with because we kind of went through it. They're repealing some of or trying to repeal some of those changes now. And for good reason. There's good and bad to everything, and definitely the community is in the certain sites that we're involved with reaching out and saying, hey, these might not be a great fit on every single city lot. And so, they're trying to make changes and refine what they put in. So it's always really important to be up to speed or working with a professional on your team that's up to speed with what's going on with the zoning in the city. When we talk about off-market strategies, we're not going to dive into that in great detail. Really, this is just how you could market for finding lots or land assemblies off-market, and some of the things that you can do on how to acquire these other than the MLS or realtor.ca. We put on here the power of relationships. It is really important that if you are looking to move forward with one of these projects, that you get the word out to people in your real estate circle, and be specific about what you're looking for, because you never know who brings you an opportunity. It could be a property manager, it could be one of the builders that you were talking to, it could be one of the city planners or your architect that brings you a deal and says, hey, I think this might be a good fit based on what you told me you're looking for. It happens all the time where we could be talking to other agents and they'll be like, oh, I had a client the other day that had a lot that might fit exactly for that, and you can move forward very quickly without really having to even look at the MLS.
I think we get 10 or 15 emails a week now, just because people, recognize that we're in that space and Yeah, so it's definitely good to make it known
Yeah.
that you're working on developments.
For sure. And again, just to touch on, this is just high level. We're not going into significant detail on each one of these items. We do want to just kind of give everybody an overview of what you can expect high level when you're considering land development as an investment strategy. It is not for the faint of heart. It is definitely a very involved process if you're taking it on yourself, you do need to be prepared for a pretty sizable amount of work. When we get to the feasibility part, so okay, we found a lot. This is interesting. We think this is a good opportunity. What do we do next? Well, we have to look at the feasibility of the project and the site. And the very first thing that we should be doing is we should be taking a look at what our pro forma looks like, what our rents look like or could look like, and also your expenses. What can you expect for the expenses on an operating basis when the project is complete, as well as what are your expenses going to look like through the duration of the construction as well. There's a couple different ways you can go about doing a feasibility study. You can hire a professional to come in and do a full feasibility study for you. You can work with again, other professionals on your team who have experience. Your mortgage broker can lend a hand in this, your architect. So you want to make sure you're surrounding yourself with people who have done this before and really understand what you're looking to achieve. And what it boils down to is, do the numbers actually work? Be very conservative in your underwriting when you're coming up with rents and vacancy rates and expenses. Be conservative. You don't want to overestimate what you could get for rents or underestimate what your expenses are going to be. Be realistic. I'd say that's the most important part. And if you don't know what those numbers are, make sure you're seeking good advice from professionals who can help you come up with those costs.
We talked about economy of scale, but it can also be scale of mishap costs, right? I think when you're running numbers too tight on a single family, sometimes you can squeak by and you might be feeding it $50, but everything times 10 doors 10, you know what I mean? If you're running things too tight, it's just going to multiply that to sometimes an exorbitant amount. So
yeah, for sure. And just because you can borrow 95% loan to cost doesn't mean that you should. So you really just need to know your numbers inside and out. Soft and hard costs. So when we talk about soft and hard costs, again, this would be project specific. Your soft costs would be, things like engineering, legal costs, design plans, working with the municipality, permitting costs. All of these things would be considered soft costs, and your hard costs would be construction costs, things that are physically going on site, like your foundation, your excavation, your demolition of the previous property if there was a house on the lot when you purchased it. All of those things would be considered hard costs. And so you're going to bring those costs together to get an overall idea of whether or not this project is feasible. And one of the other things to look at that's important is, are you seeing saturation in that community? Is there a whole bunch of construction happening? Are there new builds popping up on every street corner? You really have to consider what's going on in the community that you're looking in, as well as your tenant profile. You wouldn't want to build this fantastic A+ building in a C- community. No. It just wouldn't make good sense to do that. And also, understanding and getting to know what you're comfortable with for your return on investment, as well as your turnover with your tenants. Like if you're in this for the long game, 10 years plus, return is important to understand, but it's not the end all be all. There are lots of ways to enhance your return over time. This is something you're looking to build and sell. then it's more important because it's a shorter game, and you'll need to understand, what do I stand to gain or lose in this project. So when we talk about rezoning, we touched on it just briefly. You're going to be working with either a city planner, a designer, an architect, an architectural technologist. There's lots of ways you can go about it depending on the size of the project. But what you're trying to achieve is understanding of what's happening in the community. Are you the first in a community?
You don't want that.
You don't want that. Community precedents, like, let somebody else set the precedents for you, unless it's a fantastic opportunity and you have a clear path forward with the city or municipality that you're working in. Great. But in most cases, in my experience, you don't want to be the first one putting this in front of city council. You want somebody that's gone before you and to understand what those responses by the city and the community and any engagements that have come from that. Calgary is a great resource in terms of if you're looking for investment in Calgary and you're looking to do a development, but you don't fully understand what the community is saying, or if you can get to the bottom of what's happening, you can simply go to the city website and log into hearings that are happening in the community, or even go down to the municipal building and sit in on some of the hearings that are happening and listen to what the community engagement is.
It's actually interesting.
Yeah, there's different things that come up, and your planner usually will be involved in a number of different cases in different communities and can give you some insight as well. Understanding the permitting timelines, it's very different in Alberta than it is in Ontario in terms of how long it takes to get things through, the amount of red tape and hoops that you need to jump through to get the permitting done. In Alberta, both in Calgary and in Edmonton, there is what's called a contextual use for a lot and a discretionary use. And so really understanding, again, the bylaws and what the zoning allows and doesn't allow is important. And then kind of, do I want something that I can go straight to approval, DP approval, and site plans and a building permit? Or do I want to try and maximize what I can get for value and space by going the discretionary route and getting the permit kind of relaxed for some concessions that you might be asking for? They could be as simple as setback concessions on the size of the building, where you're going to place the building on the lot. It could be, more complex and involved depending on the size of the project. And so really understanding your permitting timelines is important when you're setting up your budget for the timeline. At this point, once we've had an opportunity to talk to the municipality, we've worked with our planners, we've got a base idea and understanding of what it is we're potentially putting forward, we'll do a risk assessment. And that risk assessment will be detailed and will kind of give us an overall analysis of the project in terms of what are our overall risks in the project and how do we mitigate those risks. And then that kind of leads into the design and engineering. As I mentioned earlier, depending on the size of the project, you can work with, a designer, architectural technologist, or an architect. There are some regulations around, the sizing of projects. I believe in Alberta, if it's 5 units or under, you can work with an architectural technologist. Anything over that, you're pretty much bound to working with an architect or making sure you have an architect that's signing off on all your drawings and your project as a whole. When we're looking at purpose-built rentals, which is typically what we've built, I have done some infill projects as well, completely different set of rules for infills, single family and duplex. But when we're talking about these projects, specifically multifamily, functionality and efficiency is really important. And
Mhm.
you want to maximize the amount of living space for your potential tenants in the future so that they're happy and comfortable in their living arrangements while still being able to maximize the value of the building and keep your costs down.
Mhm.
So it's a balancing act. It's always a balancing act with choosing finishings, and how you frame roofs or roof peaks is also something that doesn't always get picked up on, but you can save a lot of cost and hassle by using very simple designs. I'm working with architects and architectural technologists that have done a large volume of these projects has its benefits because they typically will have the little shortcuts figured out and things where you can save on material costs and the way things are put together and built.
And location too.
Yeah.
Obviously, the one that's just completing in inner city Calgary, it's a little fancier, a little bougier than perhaps the next one that we're going to do, which is in a small town, High River. So you want to make sure that you're building for the tenant demographic and it's on point for the location.
Yeah, for sure. And then when we're talking about rental versus resale, again, the way that you design the building and the layouts will kind of be reflective of what your end goal is. If you're selling them, if your building needs to sell them, then you would use different finishings likely than what you would in a rental building. When we're renting and we're holding something long term, we're really concerned about cost and durability of a product.
Yes,
Long term. So, same thing when we're looking at exteriors. There's lots to consider there in terms of how you put these together. Site planning is specific to your site and really understanding, how the plumbing gets set, how the electrical is coming in. Do you have natural gas on the site, or can you have natural gas? Or using heating oil? There's lots of considerations when it comes to site planning. How do you access the site? Where is the parking going to be? So all of those types of things are part of your design, and it's very important to really work with your architect and your builder. You should be interfacing between your builder and your architect or your architectural team. There should be some interface as the design proceeds through for feedback from your builder. Structural, mechanical, electrical, plumbing, and DSSP considerations are also really important. If you jump into a project, smaller projects don't typically need a whole lot of mechanical or electrical engineering. They can be simply laid out and move forward. They don't always need to be signed off by an engineer, but once you get past a certain size range, you're going to want to have each discipline involved, and you'll have an engineering team that will put together what's required for your sign-offs and your drawings in your planning. And it's really important that you're working with experienced engineers who have done this project or similar projects in the past. DSSP is an acronym that we use for deep services underneath the building that tie into city services. So it's your water, your sewer, your gas, your electrical lines. Are they above ground? Are they below ground? And also water retention. What are your requirements with the city for water retention? It's different in every municipality, so you can't have just one size fits all. It's very specific depending on the community, the age of the community, the age of the services, and what the city will and won't allow.
And some of that, it's hard to know from the very onset, I think, right? Because we've had some surprises where, once we got to the electrical stage, we were informed that we needed to upgrade the electrical, for that. So there are always surprises, no matter how informed you think you are from the beginning. So just be prepared for those as well.
Yeah, and there are situations, where you can tell that hey, this power pole's been here for 50 years and that transformer does not look new. So we might have to consider that there'll be an electrical upgrade here, and you can reach out to your utility provider or your electrician or architect to confirm if there are going to be those requirements up front or a potential of those requirements up front, and start including that in your budget as you're working with your builder to come up with costs. Speaking of which,
Hey guys,
um,
just before you move on,
mhm.
there's a couple questions can I throw at you? So one of them was a traffic study could be expensive. So can you talk to a little bit about the cost of traffic studies? And then also another one was what is an infill?
Yeah, so we I guess we can take the questions as we're going through. So traffic study, you would work with again an engineering firm or a planning firm who does these studies specifically, and it would really depend, again, site specific. The size of the site, how many vehicles will be on site will kind of dictate what type of data they need to collect. Usually it's a fixed fee, and it can range. There's a huge range on what those studies could cost. We've never had to do one in Calgary or Edmonton. Our units are just simply not in the size range where it's affecting traffic to the point where we need a study.
It'd be more common in the larger apartment developments.
Yeah, for sure. Especially on a busy street or streets where there's lots of signaling and lanes. Traffic study would probably be more relevant. But on a smaller, like 8-10 unit build, they're less relevant, and we've never been asked for a traffic study. With respect to the infill, an infill could be, where you're tearing down an old single family home and replacing it with a single family home that's newer. You're modernizing in a community that where it makes sense to do that. So you could be taking a single family home, knocking it down, putting a luxury build on there. You could be putting just another entry level home on there. You could be putting a duplex on there, a fourplex. An infill is just a fancy way to say tearing down a home that's old and tired and needs to be replaced and putting something new in its place.
Mostly though, people use it for smaller scale.
Yeah. So financing is also a major consideration, and there needs to be a really solid financing plan before you decide to move forward. You definitely want to work with a mortgage professional who has done this a number of times and can give you a lay of the land and a breakdown of what you can expect as you move through. It's usually a multi-phased approach where you've got different types of financing for different phases of construction. So when you buy the land, you may decide to, use a regular big bank mortgage when you buy the property, because you may have a longer term vision for development, and so you may end up buying it with single family financing in place. And there's nothing wrong with that. But before you go knocking your house down to put something bigger on, you definitely have to have an understanding of what your lender is going to require before you do that. For us, we've used private financing on the acquisition. So whether it's a private lender or hard money, where you're taking your own cash that you've got and you're putting it into the property, and then you're getting a construction mortgage after that. Once you've made the acquisition and you're ready to move into construction, you'll have some sort of construction term financing. That could be conventional term financing, or it could be a government program where it's part of CMHC financing. And then once you complete your your construction, then you would have what's called a takeout, and that's basically moving into your final mortgage structure after the building is complete, if you're keeping it, and then potentially a refi down the road. I love this picture of the goose with the golden egg. That is my favorite part about multifamily is, as you move on in time and you pay down your mortgage, you have the ability to refinance. And, every so often you'll get this golden egg where it's cash in your pocket. You're putting money in your pocket, tax free, and you're basically lining up your income from your tenants and your rents and your expenses with what the value of the property is and how much debt you can support in that property. So it's my favorite part. I'm being honest.
If you take care of the goose.
That's right. You got to take care of the goose. And there's different approaches to financing as well, and different schools of thought about how you can get into these developments. You can use a government program. So CMHC is the lender that the governing body for the programs that are available through MLI Select, MLI Market. There are other programs available through the government as well, versus traditional financing, which would be a commercial arrangement. And usually it's tied to the cost of construction. So understanding your time to construction from the beginning of your project, also understanding the time in construction is important. And then how long is it going to take you after construction to get into your final financing? So really having an understanding of the timeline of what it's going to take to get those done. If you're using government programs, you're going to be subject to the program rule changes that come. Typically, there's social covenants related to the programs. So you really need to understand those social covenants and the long-term impact of them. And again, the changes that come or could come potentially from using the government programs.
And often there's no way to know about that. And it feels quite unfair at times because it's effective immediately. So again, it's resilience in this space, because you've got to be able to roll with it.
Yeah. And then liquidity and net worth requirements. I see there's a question here as well. How much cash should you have in comparison to the final total cost? So again, project specific, really depends on the size of project that you're building. For a typical 8-unit build, my experience in Edmonton is that you need to have somewhere between 400,000 and 650,000 in capital starting out, and that will take you through a lot of cases from start to finish without any stress. If you get into a larger size project, you really need to have an understanding of what that cash requirement is going to look like. When it comes to commercial financing, it's really about the building and the economics of the business, not necessarily the individual. That's kind of the main difference between residential and commercial financing. Residential is based on you as an individual, how much you earn, the stability that you have in terms of your debt service numbers, and what your credit rating looks like. When it comes to commercial, it's less about you personally and pretty much all about the building and what the building can produce or perform will really dictate what kind of loan terms you're going to get into. So there
They
are
often look at you still as like a personal guarantor.
Yeah, for sure.
But not as much onus.
Yeah, so there'll be liquidity and net worth requirements that you'll have to meet, those minimum thresholds, and then you will have to have cash on hand. So that's important.
I think just for when I started Lux, and it changes and it depends on the program, I think. But it was about 25% net worth, right, of the project cost.
Yeah.
And then they want to see 10% liquidity that you have, obviously, based on the project cost as well.
Yep. So raising capital, we put this on here just in terms of like how you can fund these deals. It is possible to raise capital for this type of a project. Super important that you do your homework and your due diligence when it comes to, you know, partnering up with people. Structure is really important. There's lots of different ways to structure how you raise capital, and the final project team that you're going to have will kind of dictate the structure. You can do a GPLP, you can do a joint venture, you can have a debt structure versus an equity structure, meaning, you could have debt partners that come in or equity partners that come in, or both. So, those are all things that you need to consider. And you should be working with a securities lawyer and understand the securities laws before you go out and raise capital. You really need to know what you're up against, because there are some pretty strict rules around how you go about this.
I think there's a question.
Yeah, well, I'm going to leave it for now.
Okay.
And we're just going to move on.
Sounds good.
So construction, it's important to, understand who you're going to choose as a builder. You should interview lots of different builders, and it's just like any other relationship. You want to make sure you've got a good fit, somebody that's got experience, done this before, has all the required certificates, documents, things in place to make sure that you're protected as the consumer, the end user, and your builder should have all the relevant insurance and everything in place as well.
There's a range.
Yeah, there's
I think
quite
I
a range.
interviewed between 15 and 20, and I was surprised to see the range. So
Yeah,
it's a good, and to know that you're comparing apples to apples as well, right? Because they're not all
absolutely
quoting the same way or on the same thing.
Yeah, it's really important when you're doing a budget or coming up with a budget that you understand what it is that's being included in the scope of work. And so when you're choosing a builder, you want to make sure that their budgeting is done the same as other builders who you're talking to. You're not just getting a per square foot price, because some builders include different things in that square footage. So you really need to drill down into that cost per square foot and understand what that entails. Personally, I prefer a detailed budget, where the builder's actually providing you with a budget. Contracts are also another part of the construction. So understanding what you can and can't do with contracts. There's fixed price contracts, there's cost plus contracts, there's hybrid contracts, there's private builder contracts and CCDC construction agreements. So really understanding what you're getting yourself into. And again, somebody who's good with contracts, working with a lawyer, reviewing the contract, making sure that there's any questions that are coming up or getting answered, and understanding what you're able to do in terms of the government programs as well. Different government programs have caps on how much of your budget can be cost plus. They love fixed price contracts. That's typically what they want to see. So make sure that your builder is on the same page. When you're going through construction, there are typically draws. And what a draw is, you're not expected to pay all of the construction costs up front. They happen at progress points. So there'll be a milestone of such where, maybe after the foundation is complete, the builder's going to come to you and ask you for a lump sum payment for that work up to that point. So then you're going to go to your lender and you're going to ask them for a specific amount of money based on how much money you've spent up to that point. So this is where liquidity is important, to make sure that you've got enough liquidity to cover you for that first section of construction, so that you can get to your first construction draw. And then, you'll be recouping the costs that you spent up to that point. You'll also probably have some sort of inspection requirement, whether it's a quality surveyor who's coming in and checking the work that you've said that you've done versus the actual work complete. or it could be an appraiser that comes in. Again, it all is lender specific. And some companies, banks like, some companies they don't. So, they'll have their preferred go-to people, and that's who you'll work with when it comes to the inspections and the draws. What can go wrong and how to mitigate? Lots can happen throughout a construction project. It's just like any construction project. There's all sorts of things that can come up along the way, and we can absolutely be exposed to a lot of different things over the course of construction. I'm not going to dive into that in great detail right now, because there's a laundry list of things that can happen during construction. Once you're complete, you'll get to a position where you're going to be like, yay, construction is finished. Now what? Project is finished. Well, we need to make some money. We need to cover our costs and make sure that we're, able to pay that mortgage every month. So, do you want to do pre-leasing? What are the pros and cons of that? Can you even do pre-leasing? What does your contract look like with your builder? You may have to wait until completion before you can even consider leasing. But the object is, you want to get your people in as quickly as you can once you've completed the building. And, tenant selection, just like any other rental property, is super important. You want to make sure that your tenants are a good fit for you and for the property. Property management, same thing. We need to decide how involved we want to be in the project management. Do you want to do it yourself? Do you want to have somebody do the leasing for you? Or do you want a full-on property manager that's going to manage everything from A to Z through the life of the project? The bottom one here, rental achievement and DCR. Rental achievement speaks specifically to what's called your certificate of insurance through a CMHC program, whether it's MLI Select. And then DCR research is referring to debt coverage ratio. And those are two important parts. If you have a rental achievement clause, then you probably have a minimum DCR that you need to meet. And that will be relative to how much you're collecting for rents. So again, really important to work with a mortgage professional who gets what you're doing and can help you through those numbers and understanding on what your requirements are as you're going into the lease up phase of your project. So your project is complete now. You've stabilized, or you've got all your tenants in there. Your leasing is all done. Now what? So you're going to stabilize the building in terms of you're going to start seeing things level out. You're going to have income that's coming in every month. You're going to have expenses that start to stabilize. You'll have maybe some deposit money that's coming back from the builder or potentially the city. You might have some agreements that close out, and those costs drop off over time. You might have landscaping costs that come on. So the idea is, you're going to stabilize over the next 12 to 18 months and really get a good understanding of the overall project costs and how much income you're bringing in. From there, you can really have a number of different exit strategies and decide, what it is you want to do on completion. You can build them to sell them. You can separate the titles and individually sell the units, or you can hang on to it, which is what we do long term. We don't want to sell these projects. We want to build them and keep them for ourselves for long term. So that's it in a nutshell. Risk management, this is just kind of a rough idea of some of the big points that can come up. So construction delays, how do you mitigate construction delays?
Oh, sorry.
You would have strong project management, site inspections on a regular basis, and accountability in your construction team through your site supervisor or your construction manager at your builder, so that you have a really good working relationship with them, and everybody has a really good understanding of project scheduling and what you can expect moving forward. Calgary and Edmonton, we have some wicked winters. Sometimes you can work all winter long. Sometimes you can't get 10 days in over the course of the winter. So it's really hit and miss. So you do need to be, again, conservative in terms of your overall construction timeline. And then budget overruns. If you're in a fixed price contract, it's a little less of a concern because, you know, everything's got a fixed price. If it wasn't included in the scope of work, change orders are real. They happen. You know, if maybe something got missed or you want to make changes, then you need to consider those changes as part of the overall budget. And then, you know, regular budget reviews, you should be going through every single draw, reviewing your budget, actual versus budget. Where are you? What are your contingency allowances, and really understand what those look like. And interest rate and market changes. The market does change over time, and interest rates change over time. So really understanding the financing that you're in and how that affects, you know, interest rate changes affect your overall project. And again, being conservative in your underwriting, the capital reserve that you have on hand for your project, and additional liquidity available to you if you need it. So I find being conservative at the onset of a project and over capitalizing a project is way easier than trying to find money later on when it's a scramble and you're like, crap, I don't have enough money to do this. And now you're out looking for money again. So it's way better to have too much money and return it to your partners afterwards, or have a pot of capital as a capital reserve at the end. That's good. That's the best approach in my opinion.
I think because the timelines are longer, it's not just a 3-month flip. So oftentimes you go through a few interest rate changes, a few market changes. So get ready for that, because it can be a different world coming out the end than you anticipated at the beginning.
Mm-hmm. So that's about it. Why don't you take us out? And we're almost finished here. We might have a couple minutes for questions at the end here.
Good job.
Thanks.
He's such a good teacher. I love listening to him, and I hope that everyone's getting value from this. It is a long and it's a complex process, so don't get the wrong impression about it. But I would say going into it, make sure you're educated. Whether that's through mentorship, through people that have gone before you who have done it. There's lots of courses out there, and there's lots of ways to educate yourself, but it's not something you want to go into blindly. Yeah. Also, make sure it is about the team, I would say, because you're not doing this on your own.
You need a power team.
Yeah. And I always call it the dream team. Once you have one, easy to rinse and repeat too. So take your time in the beginning just to research, interview, build that strong team. Know your numbers, of course, like in any
numbers. Yes.
in any, like, this shouldn't be new for investors. However, like we said, it can be a different world at the end of the project. So just make sure you've done everything ultra conservatively. Just because, you know, they want to give you all this money doesn't mean you should take it. And yeah, at every step of the way, I think it's good to just watch those numbers, because construction, it's very, very easy to go over budget.
It can get away from you very quickly, and without you even realizing, unless you're right on top of it. So
yeah. And again, do not underestimate the complexity of development. So, but it is once you get it down pat, you know, it is something that becomes repeatable. And most of the time the process is similar. The budgets are going to look, you know, so you just have to take the time, I think, on your first go round to really, really get familiar with the space and educate yourself. And that's it for the high level version of this development course. Colin and I were happy to be here today. I know we're probably just scratched the surface, and there's going to be a ton of questions. So if you have something that's burning and you didn't get a chance to ask today, or you're on the replay, let's connect. You can contact us through the QR code. But otherwise, that's it for today's presentation. Do we have time for Q&A? Hello? Yes, we do. I got the thumbs up, so that means we can take a few questions. Now I just have to find that chat again. I forgot that it was blocking.
So one of the questions that is on is, do you hire a quantity surveyor or does the builder?
No, you as the project owner are typically responsible for the surveyor, and that's if you have a requirement for one through your lender. Depending on your financing, you may or may not have a requirement.
Thank you. And another question that came up, this might be a much bigger question, is from Tyson. Rents have come down in Alberta over the last year or so. Are the small developments still financially feasible?
Depends on where. It really, you got to run your numbers and be specific on the sites. They are still a strategy that's being utilized. We see it in a lot of primary markets right now. There's been a lot of buildup in Calgary and Edmonton. So be specific about where you're looking. Yes, it's still a viable strategy. Are we going to continue building in Calgary and Edmonton? No, we're not. Not right now, because it's really hard to find those numbers, location or lot where those numbers work in this size range. But we are exploring secondary and tertiary markets where, yes, the numbers do work and the demand is still there. As a matter of fact, the demand is really high in some very specific markets. So, another option is to size up. It might not be feasible in this 8 to 12 size range anymore in Calgary or Edmonton, but that doesn't mean that you can't size up and look at a project that is feasible in a larger size range.
And in fact, the appetite, I think, with lenders is for the bigger projects. So that might make it easier in some cases.
It's easier to borrow $10 million than it is to borrow $3 million right now. That's the reality.
We just want to
Okay.
thank you both so much for your time and expertise tonight. I don't see any more questions here, and we're just about at the hour. So we'll hop over to Laser for all of our Igniteds. Thank you to Fearless for coming on tonight. And again, if you're watching the replay, let us know if you have questions, ask them there. We'll get them answered for you. But thank you both, Corey and Colin, so much for coming on tonight. And
Thank you very much for having us.
Yes.
We were very happy to be here, and thanks for the opportunity.
See you guys later. See ya in Ignited.